Didier Mortgage. Let's talk about if your credit scores are lower. What does lower mean? If you're in the 600 range, 680, 690, where you're saying, well, it's above 680. Well, it's always good to compare an FHA to a conventional loan. Interest rates and PMI are incredible with interest rates or credit scores of 740 or greater, right? That's where you own the show. But when you're down in the 670, 680, you really want to compare it to an FHA loan. Because, like, for example, you could have a 678 credit score and you might have an interest rate of like a normal rate on a conventional could be 6.6, but you'd be at 7.25 and your PMI will be a lot higher. But if you did an FHA loan, the rate could be in the low sixes and a 0.55 PMI factor. And believe it or not, that PMI factor on lower scores on a conventional loan could be higher than that. The only disadvantage on an FHA is there a funding fee of 1.75 that goes on top of the loan. But I think on all alternatives, you need to compare what the payment is and the rate is compared from conventional to FHA, depending on your credit score. If you're not flying at 740 and higher, look at the difference and see what makes more sense. When you're getting a contract and you're getting pre-qualified, take a look, see what is the best one for you. Because remember, you're going to refinance because I've told you before, the probability is incredible, an event, and rates will drop and conventional. So Didier, thanks for tuning in and have a great day.